Is SOFI gearing up for a breakout, a breakdown, or just grinding sideways? Today, we will break down the charts across weekly, daily, and 4-hour timeframes, and we will also look at the option chain to see what traders are betting on. Welcome back to Fintech Spy, where we dive deep into fintech charts and market trends. If you are new here, hit that subscribe button for more technical breakdowns. Let us hop right into SOFI. Before we begin, remember, I am not a financial advisor. Do more homework than this quick spy on what the chart is doing. On the weekly view, SOFI has been trending down for the past 3 weeks, so this move has had enough time to shake out a lot of short-term traders. Even with that pressure, we are still holding above a major Fibonacci level around 23.49, which is at least a comforting sign for the bulls. When price respects a level like that on the higher time frame, it often becomes the line in the sand for longer-term investors who are looking to add on weakness rather than chase strength. It also sends a message to short sellers. As long as that support holds, there is real risk of a sharp snapback if they overstay their welcome. Both the MACD and stochastic RSI still point toward possible retracement, so we cannot ignore the chance of one more leg lower. But with the stock RSI already oversold on the weekly, the risk-reward starts to lean in favor of buyers who are patient and thinking a few months out instead of a few hours. So from the weekly perspective, we are at a potential turning point. Either we lose that Fibonacci support and pull back further, or buyers use it as a base to build the next move up and trap late bears on the wrong side. Shifting to the daily view, Friday's session bounced right off that Fibonacci level and managed to close back above it. That reaction tells us buyers are paying attention to this area and are willing to defend it, at least for now. Whenever you see a clean intraday break below support that finishes with a close back above it, that is often the first sign that sellers are starting to lose momentum. Short-term traders who chase the breakdown late can end up trapped if price keeps grinding higher from here. Heading into the new week, I want to see if more buyers continue to step in early, especially with the stochastic RSI oversold and that doji candle often hinting at a reversal. 2 or 3 strong daily candles in a row, holding above that fib zone, would go a long way toward confirming that this was just a shakeout and not the start of a larger leg down. If we start stacking higher lows and stronger closes above that area, it leans this daily trend back toward a constructive reset instead of a full breakdown and keeps the door open for the weekly chart to turn up as well. On the 4-hour chart, we are already seeing buyers step in to defend that same Fibonacci area that showed up on the daily and weekly views. Each dip toward support is attracting bids, which is exactly what you want to see if a short-term bottom is starting to form. Intraday traders are clearly treating this zone as their line in the sand, taking quick entries near support with tight risk and looking to sell into strength on the way back up. That kind of back and forth can look noisy on a small time frame, but it often marks the early stages of accumulation before a bigger move. Let us hope the early Friday morning low near 23.52 does not get retested in a meaningful way. If we keep putting in higher lows above that area on the 4-hour chart, it adds another layer of confirmation that this leg of the sell-off is running out of steam. And if intraday strength here eventually lines up with the daily and weekly turning up as well, that is when you can see the move really start to build momentum in favor of the bulls. Looking at the November 28th options chain for SOFI, open interest shows a fairly balanced tug-of-war between bulls and bears. Open interest simply tells us how many contracts are still open at each strike, and when you see clusters build up, those levels can start to act like magnets into expiration. On the downside, bears would love to drag price toward the $24 or $23 strikes, where put open interest starts to build and downside protection really kicks in. If price drifts into that zone, those put buyers stand to benefit and call holders are the ones feeling the pressure. On the upside, bulls are eyeing the 27, 28, and even 30 strikes as potential targets if this pullback turns into a reversal. A fast move into those higher strikes would flip the script and put call sellers on the defensive instead. Implied volatility is also an important piece here. When volatility is elevated, options become more expensive, which usually means the market is pricing in bigger potential moves in either direction. Given the combination of open interest and implied volatility, the options market is at least leaving the door open for a shift back in favor of the bulls, especially if price keeps holding support and starts to grind higher into those upper strikes. Putting all of this together, SOFI looks more like it is at an important decision point than in a confirmed breakdown. Key support levels are still holding, momentum is stretched on the downside, and buyers are at least trying to show up when price tests those zones. If SOFI holders want to turn this into a constructive reset, buyers simply need to keep defending these levels and start nudging price back above nearby resistance in the days ahead. A steady pattern of higher lows and firmer closes, especially if volume picks up on green days, would tilt this setup toward a bullish reversal instead of a deeper slide. At the same time, it is important to remember that nothing is guaranteed. If those supports give way, this pullback can easily extend and force us to look for the next demand zone below. So my outlook here is cautiously optimistic. The risk is still there, but the reward starts to get more interesting if this support continues to do its job and bulls follow through. If you agree, disagree, or have your own levels you're watching on SOFI, let me know in the comments. And if there is another fintech name you want on the radar, drop that ticker too, so we can spy on it in a future video.